what kind of person can actually make money from Supermicro stock? I ask this because Supermicro is quite a complex entity. Just take a look at the volatility and the stock price. It's clear that there's a lot going on. But today, I want to introduce a fresh perspective that will help you understand Supermicro better. Determine if it's right for you to invest in it. If you can grasp these underlying dynamics, you will be well positioned to make more money from it. So, if you're interested in it, don't miss today's insights. Hi, I'm Sheila Wang. I'm here to update it on the most cutting edge and fresh business and investment information for you. So don't forget to smash the like button and subscribe my channel. I also welcome you to join the discussion in the section below. Now, let's get into today's topic. Do you have the experience that searching for information about Supermicro online? Good luck wading through the vast ocean of content. This stock has generated a ton of buzz, right? Which means a lot of eyes on it. And where there are people, emotions run high. The emotional factor plays a significant role in Supermicro's price movement, my friend. For instance, just recently on September 26, we learned that the US Department of Justice is investigating Supermicro for alleged accounting violations. And what the result? Supermicro stock plummeted by over 12% that day. But then, only just a week later, on October 8, the company announced that its quarterly GPU shipments equipped with liquid cooling solutions exceeded 100,000 units. Boom! The stock shot up more than 50%. Suddenly, some folks started hyping up the reboundance as a sign of potential strong growth ahead. So what we can find from it? Yeah, the Supermicro, it's just an emotional roller coaster. Now you might think that the financial misconduct is a serious issue, and it is. Yet, the fervor of investors can often overshadow past events, leading them to elevate expectation of billion-dollar revenues. This emotional volatility creates trading opportunity for those who understand these connections well. So, back to my initial question. Who can actually profit from Supermicro? Here's the scoop. The first group of people who can make money are those short-term investors who are great at gauging emotions. Their decisions to go long or short are based on pinpointing emotional turning points. These traders don't make judgments from a moral standpoint. Instead, they assess how concentrated information impacts sentiment, which in turn dictates their trading actions. Let's break it down to the basics, folks. These investors are decisive, effectively leveraging first principles. And do you remember the Aristotle's wisdom? He said, first principles are the foundational truths that can be proven or disproven, but from which everything else can be derived. So, what's the first principle in the stock market? Simply put, making money. Does our personal bias or moral judgment about a company help us make money? Well, the answer is clear. I truly admire the first type of investor who can profit from Supermicro. If you are one of them, drop a comment below and let me know. You're doing an amazing job. Now, I can't wait to dive into the second group of investors who can make money from Supermicro. Honestly, I believe there are more of these folks out there. That's right, they are the mid to long-term investors. Maybe you are holding on to Supermicro right now and wondering, should I keep holding it? If you see the stock take a dive and think, is this a good opportunity to scoop up more shares? These questions need to be answered through first principles too. Let's refocus on the company's financial performance. After all, when you buy stocks, you are investing in the company behind it, right? And it's long-term profitability that what truly matters. So let's put aside any personal connections between Jason Huang and Charlie Liang for a moment and get to the facts, the cold and hard truth. First, let's look at the numbers. nearly 90% of Supermicro's revenue comes from its server and storage business, which is a classic cyclical industry. This means quarterly performance can be quite unstable. One quarter might soar while the next could drop. For most hardware companies, operating profit margins are typically low, and Supermicro is no exception, fluctuating between 7% to 12%. For instance, in the fourth fiscal quarter of 2024, Supermicro reported revenue of $5.3 billion with a gross margin of 11.3%. This is pretty standard for a computer hardware company, right? The net profit was $350 million, translating to a 6.6% net profit margin. Not that exactly impressive. In 2023, Supermicro's revenue was $7.1 billion, with a projected growth rate of 25% over the next 5 years. While Supermicro itself has forecasted over 100% growth in revenue for 2025. Maintaining such high growth rates becomes increasingly difficult as company scales up and the hype around AI cools off. Remember, my friend, Supermicro is a classic cyclical hardware company. The truth we cannot ignore it. Unlike those internet subscription software companies that enjoy steady monthly revenue, Supermicro sales can be quite unpredictable. It's common for one quarter to be sold while the next one falters. So in my view, a 25% revenue growth rate over the next 5 years seems reasonable. And when you know this, let's crunch some numbers. From a valuation insights on it, for cyclical hardware companies, the market typically gives a maximum of 20 times PE ratio. But I'm here willing to stretch that to 25 times PE because Supermicro shows a strong growth potential and a solid connection with NVIDIA. So a 25 times PE implies that by 2028, Supermicro's market cap could be around $30 billion. Amusing, the number of circulating shares remains at the current level, that is 0.58 billion over the next 5 years. If we divide that $3 billion market cap by the number of shares, we get an estimated share price of about $51 for Supermicro by 2028. Just remember this number, $51. Right now, let's see the stock price, $48. So my friend, when you do the math, that doesn't look incredibly attractive, does it? Unless we make one crucial adjustment to our earning per share assumption. Let's say we stick with the current net profit of $1.2 billion. If that number holds steady, we really have no reason to buy this stock. If the price exceeds our $51 target, it's definitely driven by some emotional hype, my friend. Be careful about that point. But fortunately, of course, Supermicro isn't blind to these challenges. The company claims that it would benefit from expanded production in Malaysia and Taiwan, predicting that gross margin will bounce back to previous level. During the fourth quarter earnings call for 2024, CFO Dave Wiegand forecasted a return to their gross margin target range. We have ways to increase our gross margins to the target range of 14% to 17% thanks to innovative platforms based on the strategic partnership and improved manufacturing efficiency for our DLC solutions. So, as long-term investors, we need to keep a close eye on the changes in gross margins. Well, when you come to here, that means that you are really understanding what I'm saying, right? But now I'd like to show some positive favorable sign of the Supermicro. Recently, Supermicro stock jumped to 50.8% after the company disclosed its collaboration with Fujitsu to develop high-performance computing technology for AI and cloud environments, expanding its business scope. This partnership focused on energy-efficient architecture and liquid cooling, with plans to build a new generative AI platform by 2027. Besides, teaming up with Fujitsu, I think that's the reason why Wall Street analysts point out that Supermicro's ability to offer high-margin services sets it apart from competitors. While these parts are still in the works, this certainly creates some positive expectation. Finally, from a technical analysis perspective, Supermicro's stock price has been hovering around the lowest point 37.50 mark, looking for support, which is a good sign for the boost. As long as its support level holds, there's a chance for the stock to rebound to higher levels. I hope after hearing all this, you know what type of investors you are. Don't get greedy and only chase the profits you can actually understand. So my friend, if you feel this is useful for your investment, please subscribe my channel and see you next time.